All right, good morning, everybody. This is Nate Bear, lead technical tactician for Monument Traders Alliance and trade of the day. And in today's video, I just want to kind of update you on the SPY. It's been a wild few weeks. I don't even look at the daily chart. I'm looking at the 30-minute chart here. Got to really dial in these days. But I want to go over the SPY, kind of show you where we're at, give you my thoughts, and then show you a setup that I am looking for entry this week. All right, so first of all, if we do zoom out of the SPY, you can see a lot of lines on this chart. Just try to ignore those. We are having our bounce, right? So we had this big move down, tariffs, this wild historic volatility. And we are now sort of within this candle. This is the Trump reversal of his tariff policy candle right here, right? So we're sort of within this still. And eventually we're going to break the top of this candle or break the bottom of this candle and probably continue from there. And that's kind of the world we're living in right now is we're within that candle. So if I zoom in to the 30-minute chart, you can kind of reimagine this is the candle. That daily candle is coming from here to here, right? So if we look at this, we're actually kind of consolidating near the top of this candle, right? So in my humble opinion, this is setting up for a move higher. With that said, caution, we are breaking below this sort of shelf here, kind of broke below it into yesterday. And we're gapping down a little bit this morning. So if we do start to break down, we've got support that comes in around 520. There's a lot of support down through here. But ultimately, this is the trend line that I'm watching. If we break this trend line down here, right, that's a long way from where we are now. But if in this market, that could be one tweet away, and we're right back down. But if we start to break down below this trend line, then I think that really opens up the door for a break of the lows. So just keep these areas on watch. 520 is our first sort of 520 to 523 sort of is our first big area of support if the SPY starts to break down a little bit here. All right, so as far as the setup for this week, I'm looking at this chart right here, CELH, and I found this by just going over to our AI scanner, sorting by S up, and looking for the name with the most A+ squeezes. So I want to show you the biggest of those squeezes, which is the 195-minute chart, and we'll set up some trade rules for this chart right here. So basically, this is a chart that's been pretty beaten up. It was actually up here near 100. And I remember playing this little flag up here for a break towards 100, and then it just fell apart. I mean, obviously, I wasn't in it for all this, but wow, what a move down. It went down actually to under, 20, right around $20, $21. It's incredible. And now they've had a couple things going for them. They've had a positive earnings right here, right? And they are sort of experiencing this push higher post earnings, and they've built up this really nice 195-minute squeeze. There's also about 15% short float in this name. So if we look at just these people right here, where do I want to get long? Well, the most obvious point is this point of control, which is right around 36. So for me, I'm looking at this chart and thinking, okay, let's do a long at like 36. Let's use a stop underneath the low of this pattern, which is about 33.50. So stop under 33. And then for the targets, where can we get our targets? Well, let's look at our Fibonacci. And let's just kind of see, where is the Fibonacci coming from here? Maybe up to 39 and then 40. But if we zoom out a little bit and just say, well, what's above us from a resistance perspective? It's really just right here, which kind of lines up with that second target. It's these people. And then above that, it's all the way up here to like 47. So if we kind of mark these areas, so all right, there's going to be some resistance, right? And then up in here is going to be some resistance. This one lines up with our fib. But if we break above 40, there's really not much in the way of resistance up until about 47. So I kind of like this one because it's got a very nice asymmetric risk reward. So what I'd like to do with this one is go over to the options. And I don't want to get too cute. This thing doesn't have weekly options. It does have weekly options, I'm sorry, but I don't want to get too cute. I want to go all the way out to May. And if I can get this moved down into, our buy zone, which is around 36, right? We zoom back in, show you that again. Where does that come from? Well, it's just the point of control for this group of people. This is where support should be, around 36. If we can get that moved down to 36, I'd like to go with the May $35 calls right here. May 16th, May monthly, $35 calls around that level. And then use the levels that we just went over as my trade parameters. So I'll get this marked up. I get it sent out. That's what I've got for today. I hope it helps, and I hope you guys are staying safe out there. Don't forget that cash is a position, and it is okay to be in a place where you say, hey, you know what? This market doesn't meet my eye. I'm going to stay safe. I'm going to make sure I have the the ammo ready when the market is more aligned with the way that I like to trade, right? There's nothing wrong with that at all. But if you love this volatility, then you just stay safe. Okay. Things can turn so fast. It's important to just stay safe at the same time. All right. All right, gang. I'll talk to you guys soon. Have a good one. Later.